and welcome to Business Line. There was a night of jubilation in Tehran as people celebrated news that Iran and the world powers had reached a framework nuclear deal, paving the way to an end of years of crippling sanctions on the country. For many of those singing, dancing and driving on the capital streets, there could have been no better present to mark the end of the Persian New Year holiday. People hope that the deal will be a game changer. Iran and its people have been largely shut out of the global economy for years. The sanctions have been applied layer after layer, but the situation deteriorated dramatically in 2012 when the European Union joined a US-led effort to shut down oil trade. Deeper measures were implemented that included limiting access to shipping insurance and blocking Iranian banks from the SWIFT global electronic payment system. In 2013, the economy shrank by more than 5.5% and inflation soared to just under 40%. According to a study by the US Congressional Research Service, Iran's economy is about 20% smaller than it would have been without sanctions. Here comes the question, what's next for the second largest economy in the Middle East and North Africa after Saudi Arabia? Euronews Daleen Hassan discussed it with Nour Eldeen al-Hammoury, Chief Market Strategist at ADS Securities in Abu Dhabi. Take a look.
After Lausanne, OPEC said the oil market wouldn't be affected in the short term. How do you interpret this and what is the outlook in the long term?
Of course, there's no immediate effect on supplies as the sanctions are still in place and there will be no increased production from Iran until at least the 30th of June, while everyone is waiting for the OPEC meeting. If they sign the agreement, then yes, oil supply will be higher, with more than 1 million barrels per day, according to the figures from Iran. And if OPEC keeps production levels on hold, oil prices might remain under pressure.
If economic sanctions on Iran were lifted, how would that affect the currency trading in the region?
It's not only regionally, but globally. The agreement is positive for the US dollar, of course, as it's seen as an achievement for the US in the region, rather than getting into another war situation. Everyone will have access to Iran's trade, banking and oil industries, which opens the door to new investment opportunities, whether from Iran to the region or vice versa, which will also increase the trade in the Iranian rial and other regional currencies.
How might the Iranian rial react?
Well, the Iranian rial lost more than 80% of its value due to the sanctions that started in 2011, so the agreement with the West should be positive for the rial, which might recover some of its value in the next few years, especially if the banking sector sanctions are lifted. Most of the trade agreements with Iran will be in the local currency as well as the US dollar.
الريال الإيراني بالإضافة إلى التعاملات التجارية التي قد تكون معظمها بالريال الإيراني والدولار الأمريكي في نفس الوقت.
Found solutions, Iran's foreign minister tweeted from Lausanne as journalists awaited a press conference. It's an interesting detail as internet restrictions in Iran itself have been argued over and criticized, and Facebook, Twitter and Google have been filtered. There have been more fights over social messaging apps like Snapchat. We have more on this one. This is it. This is IT.
It's ironic to see how an app created to relieve people of their sense of responsibility actually made them feel guilty. Snapchat decided to drop the best friends list, a feature that allowed your contacts to see who you interacted with the most. I wonder how many friendships were broken because of this. The list was replaced by a more private and complex emoji system, which lets you see who's your best friend, if the feeling's mutual, and many other socially awkward details. By the way, if you don't know what Snapchat is, ask a teenager. He or she will explain it's a messaging system for smartphones that allows users to send self-destroying photo messages. Kids play, right? Well, not really. The LA-based company has 100 million users worldwide and recently launched a feature to show its young audience videos and articles by major media groups. A $200 million investment by Chinese giant Alibaba sent its valuation sky high at $15 billion, making it the third most valuable startup after Xiaomi and Uber. And co-creator Evan Spiegel, aged 24, is now the youngest entry in Forbes' billionaires ranking. Now that's a list you want to get onto. That was it. That was IT.
Cyprus has lifted the last remaining capital controls it imposed on its banking system during the financial crisis 2 years ago. The country was the only eurozone member to restrict these transfers. It had to go that far to prevent a run on the banks. Cyprus president says the Mediterranean island is recovering well, despite 3 years of recession.
Investors have cheered Cyprus's abandonment of capital exchange controls, ending a period in which one of the Eurozone members was effectively plugging a capital flight drain by breaking the free trade zone's rules. The controls have been steadily ratcheted back for the last 18 months since their imposition in March 2013. And with Cyprus's banking sector now totally unbundled from crippled Greek interests, exposure has been cut, and the country is again open to all market forces. Getting out of the Greek banking market was what Cyprus's creditors demanded in exchange for a €10 billion loan. Bank of Cyprus was forced to seize a portion of clients' uninsured deposits and convert them into equity to recapitalise in 2013, while the second largest bank at the time, Laiki, was wound down.
It's not only Cyprus that has been recovering. The whole monetary union is doing much better. Closely watched surveys have hit their highest levels in few years, suggesting that the eurozone may finally be returning to health.
Thanks to booming demand for European products and orders flooding in, the eurozone was able to record bumper business growth in Q1. Sustained low prices and the prospect of no immediate change led to new orders growing faster than at any time since 2011. While the growth rate for the first quarter appears modest, analysts are expecting quicker expansion later in the year. Dig deeper into the market purchasing managers' figures, however, and they reveal companies have now been cutting prices for 3 straight years, although those price cuts are now smaller than before. A new point of equilibrium may about to be reached, especially with the effects of the ECB's massive cash injection yet to be felt in Europe, which should add some heft to Q1's current 0.3% GDP growth forecast, to be confirmed at the end of this month.
That was it for now. Thank you for watching, and we'll see you next week.